Hello and welcome to Magicbricks Now, India's first property business channel. I'm Krishna Kumar and you are watching the Urban Debate. First up, the headlines. Homes in Bengaluru are set to get costlier. The Bruhat Bengaluru Mahanagara Palike or BBMP has tabled a proposal that will reduce FSI in Bengaluru by 40%. Builders will now have to pay for additional FSI. That's a Magicbricks Now exclusive. Over 4,000 homes priced between 18 to 30 lakh rupees are up for grabs in Thane, Virar and Mira Road outside Mumbai. These will be part of the Maharashtra Housing and Development Authority or MHADA lottery for 2016. With the regulator delayed, Gurgaon Municipal Corporation sets up its own panel to address home buyers' issues. Straight to our big story. Sobha Limited has released their quarterly corporate numbers today, which shows that their sales volume is up by 22% year-on-year. JC Sharma, Vice Chairman and Managing Director of Sobha, joins us now with more details about their sales numbers. Mr. Sharma, thank you so much for being with us. Talk to us. Even though your sales have picked up, you're all set to miss your new sales guidance for the third straight year, as in 9 months you have sold 2.5 million square feet versus guidance of 4 million. What exactly is keeping this weakness persistent for the company?
The year 2015 as a whole for the industry has been bad vis-a-vis the year 2014 or 13. Now, within that parameter, if you look at, we thought that with the launch of our Dream Acres, we should be able to get to a 20% increase in our volumes in the current financial year. So if we look at for the whole 9 months of the last 3 quarters, we have indeed done an increase of about 11%. The Bangalore market has grown about 19%. If you take Bangalore and Chennai market, it has grown 27%. So it is the other markets where like Pune or Kerala market or our Delhi market, we have not performed the way we thought we should be doing in this financial year.
All right, Mr. Sharma, now tell us, which are the new launches that can be expected in the fourth quarter and next year then on?
As far as this particular quarter is concerned, we are preparing ourselves for 2 big launches. One in NCR Gurgaon, which will be about a 40-acre township, 3.2 million square feet of sellable area, where almost all permissions are in place. We are also looking for a very big launch in Marine Drive in Cochin, which will be about 3.3 million square feet of a launch. Right. Hopefully these 2 launches should give us impetus on our volume growth. As far as for the next 4 to 6 quarters are concerned, company is gearing itself to launch about 12 million square feet plus of new launches in next 4 to 6 quarters.
JC Sharma, Vice Chairman, Managing Director at Sobha, thank you so much for taking time out to be with us here on Magicbricks Now. As we move close to the earnings season, it is time for a reality check on how the markets have performed in the past few months. As a buyer, is it the right time then for you to take the plunge? As an investor, which market should you consider? And to discuss that and get us a clear perspective, I'm being joined by some very special guests here on the Urban Debate. We have Amit Goenka, MD and CEO of Nissan Financial Services. Thank you so much for being with us. Ravi Ahuja, Executive Director, Cushman and Wakefield, India. And Ashish, Shah, COO of Radius Developers. Thank you, all 3 of you gentlemen, for taking time out to be with us here on the Urban Debate on Magicbricks Now. But what we're also going to do is open up the phone lines for you, which is flashing at the bottom of your screen. If you have any opinion or queries, you can reach out to us on this number. So absolutely, let's get straight to it. Amit, I'm going to start this discussion with you. We've been hearing that buyers have returned. Our ground check, a number of reports that I have on me say that all of this is true. But sales numbers are not holding up. What exactly is happening on the ground? I throw it open to you for your initial comments.
Well, there's no denying, as Mr. J.C. Sharma rightly mentioned, that 2015 was largely a lackluster year for most of real estate in India, with sales targets largely missing their forecasts or even the underwriting by a number of development companies, and it's not just therefore limited to one company, it's pretty widespread. But having said that, I think the revival that we see or we talk about is largely a phenomenon of the last quarter, which is October, November, December, which is really the Diwali and the festive season. And there are a number of factors which have obviously impacted or influenced that pickup in demand. Clearly we have seen signs where, because the first one half of the year was really, really bad, and there have been really no sales, and a number of measures were employed by developers, right from taking a haircut on their pricing as well as their margins and offloading inventory at a discount, to a plethora of financial schemes that got rolled out with a huge amount of impetus in the marketplace, right from 5% to 2080 schemes. Apart from that, the number of launches have come down, so the total amount of inventory being available has also been curtailed. And whatever sales we saw is actually really a result of some of the branded launches that we saw across some of the pockets, especially in markets of Mumbai, Pune and Bangalore. So that has really kind of excited the investors, especially including the NRI investors. So if you really were to bracket the investors between resident Indian investors and those residing overseas, you'll see that there has been a revival of the NRI interest in India.
And that, according to you, is the reason why
that I think has actually impacted or influenced the positive sales number to a very large extent.
All right, I'm just going to take this to Mr. Ravi Ahuja. And Ravi, I have a Cushman and Wakefield numbers over here which say that Pune, Mumbai, Hyderabad, Bengaluru, new launches are up according to Cushman and Wakefield report. 17% in Pune, 10% in Mumbai, 43% in Hyderabad, and 18% in Bengaluru. Explain this to us.
So the new launches which are up are on a quarter-to-quarter comparison. But when you compare it to 2014 to 2015, on an average, the new launches are down by about 40-45%. So just to put that in perspective. Having said that, the sales or the green shoots which we see in the sales uptick is really speaking because of two events. One, we've seen that the base prices have reduced across these cities. And also, on the other side, we've seen developers be smart. They've reduced the ticket size by ensuring that the layouts of these apartments become compact. Now, these two phenomena make it worth the while for a first-time self-user to go out there in the market who's been sitting on the fence for years together, wanting to buy his own apartment dream house. And therefore, we've seen these self-use type of transactions gain activity. But the investors are still very cautious. On the other hand, when you talk about the luxury segment or when you talk about the higher end premium segment, we've not seen much of uptick there. So it's really the ticket size, let's say between 35 to 60 lakhs in a market like NCR, when you talk about the peripheral markets, or when you talk about Mumbai, the price drop in Goregaon right up to 15 to 20%, or even towards Thane, where we've seen price drops and ticket size drop, sales pick up by about 15 to 17%.
All right. So you're saying that in a sense, consumers are sort of downtrading what they want, like what happens in the FMCG segment. And instead of buying a premium hair oil, they buy a normal hair oil, and that's how you've seen these sales pick up. I'm going to come to Ashish Shah of Radius Developers on that. Ashish, as a developer, what is your take on what's happening on the ground? Is there a revival in sales as far as the real estate industry is concerned?
Absolutely. I think from the last 6 months or so, I think we've seen a dramatic change for primarily few reasons. One is that interest rates are going directionally correctly. People are able to leverage more, getting more confidence on their underlying income. And as developers, I think for us it's critical to know which micro market we launch our projects. Customers have become very savvy. They want all the amenities, proximity to stations and what have you. But clearly, what has worked for us is really those plots which are very nicely located in prime areas within Mumbai. And, we're very happy that, those have seen good traction.
Ashish, I want to check with you. You have launched you do have a launch in Bandra at a competitive
other micro
price.
markets, because that is linked to connectivity and what have you. But I think the moot point is that we are seeing a big upswing in inquiries. On the office side also, we've seen dramatic uptake on the leasing side.
All right.
So, all in all, we are, fairly well geared up for 2016.
All right. You did launch in Bandra at a very competitive price. As a developer, do you think a sweetener is needed to lure the customer in this environment?
Well, I think our opinion is that, you cannot, price is pretty much determined by the market. Okay. We have to do a good job at planning. We have to do a good job at communicating what the USPs are. We understand Bandra Kurla complex quite well because of our office presence. So it was easier for us to present, a Bandra project residential quite easily. We understood what a corporate office goer likes to be, what a young family with school kids like to be. And okay. I think as developers, we've pretty much given in to the fact that the price is pretty much driven by the market, and there is not awful lot we do. We have to focus on what we can control, is giving really good designs and a great lifestyle to people.
All right. Okay, fine. Now, I'm just going to kickstart the circle all over again and start with Amit all over again. Amit, the reason why we're having this discussion over here is to figure out what do these numbers tell us? How close are they to the reality that we perceive through these numbers? And, Cushman and Wakefield numbers say quarter on quarter, launches are up. But at the end of the day, even the sales numbers that we're talking about over here, a lot of it have come about because of all the offers and schemes and, those kind of things and sweeteners being given to the home buyer. Do you think this momentum is sustainable going forward in further quarters in 2016?
I don't see any other way out where if the risk is not mitigated largely by the developer, the chances of a consumer coming in becomes that much lower. So, for example, by offering payments to start after possession is a very large risk mitigant, or absorbing the interest till such time is a large risk mitigant for the buyers. Similarly, a quick timeline to completion and taking penalties for not offering it in time again is a good mitigant. So I think it is obvious that developers have become cognizant to the woes and the needs of the buyers and becoming more reactive and responsive to these needs.
One thing is developers getting into ship shape to make sure consumer trust can be built. That is one reason. Obviously, the way the industry has been for the last couple of years, there's been no option but to do all the good things that you were just talking about. I want to come to Ravi on this. Ravi, developers getting into shape because the market is not what they would want it to be, so they have to, rearrange their strategy and work that way. One of the, main tools implemented by them are all the schemes and the launches. You open a newspaper, you find one thing or the other to, begging home buyers to come back to the market. The way it looks right now, do you think, especially if launches are up, say even on a quarter-on-quarter basis, industry is expecting home buyers to come back to the market strongly this year. Do you think that's going to happen?
Sure, that's already happening. We're seeing green shoots, and that's likely because of the two reasons I gave before. Prices are down, ticket sizes are down. Having said that, the reality of the market is that a developer is in a catch-22. Most of them, not all of them, most of them are very heavily leveraged. They have to make to interest on one side. On the other side, the sales are stagnated. Having said that, this leads to a catch-22 for them. They're in a jam. And therefore, I think the sweeteners have been around for a while. The 2080 schemes, today we read in the newspaper a BMW or Audi to be given along with a Thane apartment. Now, so these are all sweeteners. Having said that, there is a time which has come when the developer has to look at direct price cuts to get the guy who's sitting on the fence, the customer in and cut a check.
Ashish, I'm going to come to you. Ravi gave me the right cue to come to a developer on this question. BMW and Audi for an apartment in Thane reminds us of Dubai, of the Royal Palms, for God's sakes. Is it time that, developers start cutting prices to actually bring the actual home buyer back to the market?
I think all developers realize this, and I think what Amit said and what Ravi is mentioning, that all developers are thinking about ways and means. But really, the fundamental question is, is there many choices and very few customers? And I think some of those micro markets like Thane, you clearly have an oversupplied situations, and you're bound to see very smart offers. Now, Ravi may call it a cheaper price, but I would call it, horses for courses. If it's a subvention, then, developers are willing to extend that. I frankly feel this is a great time to buy, simply because the developer, for the reasons you've already covered, they are willing to do a deal. They're not letting customers go. No one's being rigid. So I think, if you're in a real estate buying market, I think there's a great time to come. Should the developer reduce price? I think, that conversation is not relevant, simply because people are not letting go of a customer. The real issue is, how do you get customers by hordes, and how do you actually bridge the latent demand versus the supply gap? Interest rates, faster permissions, and above all, general business confidence. The guy needs to be confident that he should get his, salary intact for the next 1 year, bonus, increase in designation, and ability to borrow. All those things, and real estate is linked to a far more macro indicators. And as I said at the outset, we are mere outcome. We have to. Basically, the price is determined as a function of what the market determines. So if you're a Thane developer, clearly you are in a situation where you have to generate demand and not let any customers go. On the other hand, if you have a very well located product, then you are able to explain the product far more patiently. But the price will be determined by the market. And I think developers have become far more savvier, and they are aware the importance of a customer, not just doing the trade, but it's more important that how you servicing the customers. One of the issues is delivery commitment. Are you offering what they call it kacha mal, or are you offering a proper with permissions? And I think that's something which segregates developers who have matured, have got their finances sorted out, has patient capital until the pre-bookings happen. But again, is that fully approved? Has got all its permissions in place before third-party rights are created?
Absolutely.
I think over time you will see that buyers are willing to pay the price. I won't call it premium, but they are willing to pay the price, provided the product is right and it is legitimate. So, it is, and, developers, one final say, developers have pretty much understood and gotten used to that the returns are fairly industry comparable and not really massive ones that people thought that they did. So, our business model is now devised on this lower margin model.
All right, Ashish, that's a very explanatory take from the developers end of things. And I saw Amit having a smile on his face as Ashish was talking. So I'm just going to go to Amit on that note. We've just heard Ashish out. He gave a pretty, comprehensive take on what he's saying that developers have become savvy, developers have become better. There's no kacha mal in the market. So that's the reason why sales are going up. But there is that big question of what will bring back the home buyers and hordes. You yourself said right now it's all about NRIs pumping in money and first-time users, buying houses over here. What exactly is going to bring the buyers back into the market in hordes? Is, as Ravi was talking about, developers correcting prices the way to go?
Well, certainly, I think price correction is an important factor. But having said that, again, unfortunately, even end consumers want to look at an appreciation in their investment, and a price cut or an announcement of a price cut somehow also tends to take away the confidence in that investment. So clearly it's a double-edged sword. But having said that, I do concur with Ashish to the point that today developers are not willing to let customers walk away. They're willing to obviously do whatever is necessary, including appropriate price cuts to make them stay and write a check. Now, having said that, obviously, I think the larger problem obviously lies in very, very fundamental issues, which Ashish also touched upon, which is approvals to government permissions, to adequacy of capital, and so on and so forth. But I think it is also the fact that today the launches, while new launches have gone up in the last quarter, overall also as Ravi mentioned that the launches had actually come down by almost as much as 40%, which means that today developers are far more focused on a few projects with the intention that they want to deliver it over a period of time, and they're trying to espouse that confidence amongst home buyers. So clearly, I think first is the work on the ground. I think today still there is a very precariously slow pace of development and completion, and while there was an average lag of about, let's say, 2.5 years in Mumbai, 2.5 to 3 years, beyond the outer completion date offered to buyers, and it's been longer in certain other parts, for example, in Panvel or, for example, in Noida or other parts of the country. I think bringing that confidence back really is a measure of being able to demonstrate that their project is being delivered on time.
Price is one thing, trust is another thing altogether, and you need a combination of both to bring buyers back into the market. That's very clear. At this point in time, we do have a viewer query coming in. We have Mr. Uday Modi joining us here to ask his query. He wants to invest in a 10 crore rupee property. Uday, go ahead. Please ask your query to our guests.
Hello.
Yes, Uday Modi. Thank you so much for being with us here on Magicbricks Now. Please go ahead and ask your questions. We have our experts waiting here to listen to it.
Yes. Hello.
Mr. Modi, if you can hear us, please go ahead with your question.
Yes. Hello. Hello.
Yes, we can hear you, Mr. Modi. Please go ahead.
You see, one of my relative overseas, he wants to invest 10 crores rupees anywhere in India where he can get a good appreciation. Can you suggest the place which will be the best place for investment where the money can be invested for the good appreciation?
All right. As was Uday Modi asking a query about an investment worth 10 crore rupees in property. You know what? Let me just, Ravi, why don't you go ahead and answer this question first?
Sure. What will be the tenure of the investment? If you can clarify, it'll help.
All right.
So I'm assuming that the investor will look at medium to long term as a tenure.
Yep.
And the budget is a good budget for a city like Mumbai. I have always found Mumbai to be fairly liquid in terms of exits, and I've always preferred that to some of the other markets, while Bangalore has its own characteristics.
And Pune.
Yeah, of course, all of that. But given the budget bracket seems to afford certain pockets in Mumbai which are high growth pockets, I would recommend Mumbai as a city on a macro side. And there are some micro markets. I would agree with Ashish. Some time ago he mentioned Bandra Kurla complex. In and around those locations, this budget will easily fetch a 3 to 4 BHK in Bandra East, which will take an uptick due to the Bandra Kurla complex and the employments that is generated by the evolving CBD in Mumbai. And some of the desperate deals that are available in markets like Worli probably will also see very good steady investment, provided you have a 5 to 6 year holding capacity.
All right, Ashish, if I can come to you on that question, 10 crore rupees worth of investment, where and how, and talk to us, tell us.
I think it's a fairly interesting sort of proposition. There are a lot of developers in the country who would love to have him as a client. But above all, you've got to look at, the quality of the development, micro market, as Ravi suggested, and, investment horizon. If it's and one other thing as an investment you should also look at is an office asset, which is an income yielding, where you not only get capital appreciation, but also on yield. So that's also another opportunity. But again, I would really go for bets which are on long term, which offers liquidity. Mumbai is my favorite, but again, don't stray away too much into newer locations because those it takes time. The developer has good intention, but the infrastructure takes time, and it can happen. And there are uncertainty, and a delay of 1 year, 2 years, the IRRs go out of the window. So it's really important to stay where you have a project which has good developer, great permissions, and do have a frank chat with developers. I think they are happy to kind of open the file, explain things to you. So, I wish him all the best. There will be plenty of takers.
All right, Ashish.
But go for locations that you understand. Thank you.
I'm going to come to Amit. And Amit, you do this for a living. If you were advising to our viewer who's just asked the query, what would be your suggestion question, where to invest, and more importantly, what's the kind of returns that our viewer can expect?
I would concur with Ashish on 2 points. One is that, it is a great time to also look at an office proposition, because as he rightly said, that you do get a steady yield, and the chances of now office stock appreciating over the median term seems higher than any residential stock appreciating, for the simple reason that actually office virtually stopped constructing almost 4 years back. And it's now only that people are now replanning new office buildings. So clearly the inventory has shrunk very massively, both in the BKC, Bandra area, as well as in the Lower Parel area, and it's possible to find a good proposition within that budget. So clearly sticking to the CBD markets, for a tenanted building or something which is likely to get tenanted is a great idea. I think again, clearly, it is an investment which will have to stay for some time, because at the end of the day, residential markets, while offtake may be looking better, but I think the pain points of appreciation and growth, I think, are still at least 1.5, 2 years away.
All right.
So one will have to be
haven't
cautious.
offices run up quite a bit? Do you still see an upside on that front?
Well, not really. I mean, again, depends, because if you're looking at Lower Parel, I think the vacancy levels are still pretty high. I think Andheri vacancies still are very precariously high, and I see now absorption coming back in. So clearly, I think, but the absorptions are also happening in these pockets. So over a period of time, when absorption kind of takes over and these offices start to get utilized, I think really the upside will kick in, because as I said, there's no new buildings coming up. So, and that really tends to give a higher upside to the investment, given that rental yields continue to add to the appreciation, which again is higher compared to a residential rental yield.
All right, that's some really heavy-duty advice from 3 experts for our viewer over there. Ravi, you wanted to say something? You were going to say something?
I was. On the office having run up, I would tend to agree that offices in the last 3 to 4 months seem to have seen a healthy appreciation, at least in a city like Mumbai. BKC is re-rated from the earlier 29,000-30,000 rupees, today selling at 35,000-36,000 rupee A-grade stock. We've seen Lower Parel up from 17,000-18,000 rupees up to 22,000-23,000 rupees. But having said that, if you were to compare it to the highs of 2008, they're clearly 30 to 40% still down. And therefore, while there is a bit of a run-up, I think from here on, it'll all depend on the corporate earnings and how employment is generated and how the economy does for commercial to keep going.
So, okay, so we haven't reached a saturation point as yet.
Not at all, absolutely.
Not at all. Okay. So on that note, it's a good time too, because we've been largely discussing Mumbai, in and around Mumbai, the most liquid market, Mumbai. But I have data which says that Hyderabad has seen 67% increase in housing sales. That's according to JLL. And we've been talking about Hyderabad for a while on our channel as the sunrise market. It's making a big turnaround. So on that note, I'm going to throw this open. Let's start this time with Ashish then. Any other market apart from Mumbai, Ashish?
No, we like Mumbai. We'll stay focused on this. And I think increasingly expanding out of your natural habitat, I think it's in this market capital intensive, and we don't feel it's profitable.
All right, Ashish. So I'm going to come to Amit and Ravi on that. Amit, we always talk about Mumbai and and in and around Mumbai, Pune. Now tell us, we're talking about whether Mumbai home buyers are back in the market or not. Based on what you've seen across the country, what are the other markets as far as residential real estate is concerned?
Well, I see the pain points of NCR as a whole continuing for quite some period of time. So even though it's really the bulk of the residential market, with as high as almost 40% of the overall residential market pie share.
Yeah, and I have data which says that new launches are down 68% in the NCR market. Sales are down 50% in the NCR market. So that pain point is going to continue. So if not, so then where all?
But there are markets, for example, like Chennai, where, again, industrialization has been pretty high. There's been an influx of IT to some extent. Office spaces have started to get occupied because of the BPO and IT services. It's taken a very heavy beating in the last 3 to 4 years. So if there is an upside potential, and again, because of which a lot of people actually who were in Bangalore, who are in other parts of the country near Chennai and had started to build in Chennai, have actually shied away or moved to other parts of the country. So clearly, Chennai suffered both in terms of offtake as well as in terms of valuation. I think the recent natural catastrophe also furthered subdued sentiments as well as valuations. So the only way, and again, the only way for Chennai is up, and in a very large way, because the total supply that eventually came up is really small to cater to the demand of Chennai. So I see that as a very large market upside happening.
Would you agree with the 1 second? I'm going to hold that thought of Chennai, hometown for me. So Ravi, your take on Chennai as a market to invest?
Chennai is a good market. I would tend to agree with Amit that in addition to the ITES, which South markets are known for, Chennai is very industrialized, and therefore it kind of diversifies the risk, not dependent on one sector, but 2-3 sectors. Right. I think it has also a very good education base, and it sees a lot of graduates come out and postgraduates come out. Right. Having said that, I think Pune has a similar story going other than ITES.
Your personal favorite market, isn't it?
Yeah, but I think eventually one must look at these cities and then deep dive into the micro. Where are these infrastructure projects coming up within these cities?
I was going to arrive at that.
Yeah,
yes.
Sure. And I know that's your favorite. So you must come up with the infra point. Yeah, sure. Go ahead.
No. I was just going to say that, we're talking about infrastructure. The government is pushing for infrastructure. So for home buyers, our infrastructure projects are sort of like a guiding light on where they need to be investing.
Absolutely. I think a lot of pockets will see or continue to witness correction. Maybe 5 to 7%, some more. Like NCR, we've seen a lot of pain points. But how do you arrest this correction? When does an end user decide to buy and actually go in and live there? It's because of the availability of infrastructure, such as connectivity, the railway station, the availability of malls, the availability of schools, hospitals, education institutes around it. And when you have such infrastructure built, you not only correct, but there's a multiplier effect of demand which goes in those locations. So clearly infrastructure has a lot to play to correct, the correction, and also then to have a long-term price growth appreciation.
But I think what's important, Krishna, right now is the fact that, the era of speculating purchase on a future infrastructure build-out is really not available anymore.
All right.
I think clearly infill locations, build-out locations, strong micro markets which have all the necessary social infrastructure are available at a really spectacular discount. For example, if you talk of, very infill locations like Ananagar in Chennai, they're trading at such a deep discount, where even at 7,500, 8,000 rupees, which was unimaginable till about 1.5 years back, you can actually get nearly ready to move inventory. So why would I go to a deep down into OMR or GST into Chennai yet? Of course, affordability is one factor. So if I can't pay the price of Ananagar, despite it being almost 25% down, I would still have to possibly move to the peripheral areas. But still, even a lot of peripheral areas around the new airport and other things are actually massively down. So I would still think that I think year 2016 is not for new infrastructure speculative investments, but really for capturing the downside potential that is available because of the discounts available, because of the inventory which got built out in a large way, and capturing that value today and then reaping the upside when it starts to normalize on prices over the next 2 years or 3 years thereafter.
Also, just to add to Amit, please allow me, Krishnan.
Of course I will. Please go ahead, Ravi.
Is really the infill locations are also having infra. For example, Bangalore, within a year, will be connected by the 3 metros, the MG Road, the Malleshwaram, and the Magadi Road. Now, these 3 metros, right from the peripheral suburbs, have come into the city. And once these 3 are connected, it becomes so very necessary that if there's a price drop and prices are reasonable within infill locations in a city like Bangalore, it's a great buy. So clearly, no new infrastructure. I would never recommend that either.
Okay.
I'm in agreement with Amit. For example, the new international airport, very hyped up in Navi Mumbai, may take 7 to 8 years and a long wait. So no new infrastructure that is yet to come, but visible, completed, or just about to get completed.
That's where the home buyer should go for. That is some really good analysis. I'm getting a lot of ideas on where I need to cut my next check as far as buying a home is concerned. But in the meanwhile, we have a viewer coming in with a query to buy a property in or near Kharghar. Mr. Rakesh Agarwal, please go ahead and ask a question to our panelists.
Yeah, very good evening, sir.
Good evening.
Good evening. Mr. Agarwal, go ahead.
Yeah, my question is, my younger brother, he's residing... Hello?
Yes, we can hear you, Mr. Agarwal. Go ahead.
Yeah, my question is for my younger... very first, good evening to all panelists. My question is only for my younger brother. I'm residing in Delhi. My brother, he's putting off in Kharghar. For last 3 years, he's paying a rent of 25,000 rupees per month. So I'm looking for a property as an end user, whether it is ready to move in or some soft launch or something, where he can buy or he can save 25,000 rupees rent. Budget is 90 lakh to 1.25 crore.
90 lakhs to 1.25 crores in Kharghar. Nearly ready to move in is the kind of property we're looking at. I'm going to take this to Ashish Shah of Radius Developers. Ashish, your suggestion to our viewer query.
I think it's a good budget for Kharghar, and within Kharghar there are so many developments that are happening. And if you look at the radius, there is also the metro. There is a Taloja metro station coming in about 1.5 years. So if you want to stretch the number of rooms that you want, do look at futuristic, where your brother can continue to stay in a rented flat until the delivery of the proposed under construction happens. You get a good deal today, get a bigger flat, and future infrastructure, you can go out there and see it's happening. So areas around Ulve, which is upcoming, but Kharghar is has got fairly solid sort of supply coming there. And on the Bombay Goa highway, there is another metro coming. So, watch out for those spaces where infrastructure is live and kicking in front of you.
Absolutely. That's exactly what Amit and Ravi have been just telling us. Amit, I'm going to come to you on that. Again, investor to investor. Investor to a home buyer in this sense, what would be your take? We've been talking about micro markets. Is Kharghar a micro market?
Well, Kharghar, of course, has been a very traditionally strong micro market within the Navi Mumbai area. Having said that, however, there is an ongoing issue of Naina, which is the new airport authority for that region. And really, there's been a significant amount of delay in terms of the new master plan rollout, and a number of projects, especially in the Navi Panvel area, have been stuck, because of which the inward pressure within Navi Mumbai stays in these markets, which is Kamote, Kharghar, etc. Now, once Naina opens up this area, almost 150 million square feet is likely to come up in the Navi Mumbai area. Once approvals start to roll out, and some of it has already started to roll out. So I really think, and I would agree with Ashish to some extent, to the point that waiting off right now in Navi Mumbai is a better bet, because I see actually prices tending downwards over the next 1 year as all this inventory and all this master plan starts to get rolled out, which will take off the price pressure as well as the demand pressure from infill locations like Kharghar. So I see a lot of inventory coming up. I see prices tending to be flat to down, and therefore it might be better off to actually let this play out before making an investment call there.
Oh, so wait and watch is the word coming in from Amit Goenka. Just to remind our viewers, that graph to the next of us is essentially the average price increase or decrease in the areas on top. This is Ulve, average price increase of 4%. The time period is between 1st January 2015 to 30th September 2015, and the source, of course, is magicbricks.com. So this is the 1 year average price that's being displayed in the form of a graph. That's Taloja, which is up 3% on average, from 4,305 rupees to 4,415 rupees. Just to remind our viewers, I'm going to come to Mr. Ravi Ahuja on that. Ravi, your take. Kharghar, 80 lakhs to 1 crore, 2 to 3 BHK. Amit says wait and watch because there is Naina coming up. Your take.
No, I think both are right. Great budget for Kharghar. You can afford a 3 BHK at a very, very premium micro location within Kharghar, probably right next to or overlooking the Central Park. Which is now going to become a reality in terms of Citco having given a green light for that development. So wait, maybe in 12 to 18 months you may get the price cheaper, but please be on the lookout for the right location within Kharghar and the best of it, which is facing the Central Park. You can afford it. In the long run, you will get appreciation.
All right, that's 3 views coming in for our viewer query. Ashish, I see you have a smile on your face. You want to add to what Ravi was talking about?
No, I'm just saying that, look, he wants to buy a home.
Don't stop him,
brother,
is the word coming in from you, is it?
The demand is clear. He's not an investor. Yes, you have to protect value for his investment. But, really as a bunch of guys who understand somewhat of real estate, I think you got to advise the gentleman that, it should be fit for purpose. Is it creating value? And, I frankly don't believe, 150 million supply and what have you, because like a home buyer, even a developer is, will only believe in infrastructure when it comes. So we heard of the Western Sea corridor that was proposed. These are all phrases that comes out in the media. But reality is that Trans Harbour ceiling will come whenever it comes. The new airport comes whenever it comes, and there will be speculators, investors. But for a home buyers, I don't think they are sophisticated enough to understand these trends. Money can get stuck if the infrastructure gets stuck. So it's the same thing. If you're an equity investor, you would rather go in a SIP mutual fund route and not through direct equities, simply because layman can't understand it. And our good friend here is indeed a genuine home buyer, and we got to hold his hand and take him to a right home rather than explaining him the upsides.
Ashish,
and
as a developer, I know it for a fact that you won't let go of a prospective home buyer's hand. We definitely understands that. That is the reason why I have Amit and Ravi waiting to rebut on that. I'm going to start with Ravi. Ravi, you have a rebuttal for that.
No, just two categories, right? End user, please go ahead. You have a great budget. You can start living in one of the better locales within Kharghar with this budget. So don't compromise on that. But as an investor, be cautious. Hold on.
All right. Amit, a rebuttal to Ashish then?
Well, not really rebuttal. All I'm saying is that, unfortunately or fortunately, as I said earlier, every home buyer is also an investor to some measure. And while we continue to also say and believe as well that if you're a home buyer, you can never really time your purchase. You can never really be right as to which is the right time, whether it's 9 months, 12 months, or right now, to actually buy the right opportunity at the right price. But having said that, clearly first you said that you're paying 25,000 rupee rent, which means if you're going to invest 1 crore, your yields are going to be less than 3%. I think that's one thing. And whether that's ever going to appreciate over a period of time remains, and so are you better off staying in a rental for some more time versus buying today? Second, of course, location is an undisputable value proposition, or you cannot deny a locational advantage, by any metric. And therefore, to Ravi's point, I think if you do have a right opportunity to buy overlooking the Central Park or any right location in Kharghar, and if it's available at a discount, I think definitely that makes great sense. They need not wait for 12 months. But again, finding that one opportunity where one buyer for a nearly ready apartment will sell at a discount is almost like a needle in a haystack. So, I think the market sentiments, because there's no new construct that really came up in Kharghar or in Navi Mumbai, which was worth visible or livable in some time now. And therefore, really prices racked up in the secondary market. They've not been discounts. So I think that becomes a harder exercise. But
okay, Amit.
Yeah,
I get it. Because we have another caller over here that just to continue with the discussion that we're having, we have Keshav from Mumbai calling in about a property he holds in Bhandup. Keshav, go ahead. Please ask your question to our panelists.
Yeah, good evening, everyone. And first of all, congratulations to Magicbricks. You guys are doing phenomenal work.
Thank you, Keshav.
I have a question. See, I bought this property in Bhandup. It's a 3 BHK near LBS Road. Actually, I bought it in 2010. So, first 3 years, I saw a pretty decent return. For the last 2 years, got stagnated, or maybe I would say 5% lower than what it is. And even the whole area, the initial euphoria died down. Even the malls are closing, and the construction is not really happening the way it was expected. I shortlisted the location considering the proximity of the location is significantly superior from BKC or other commercial hubs compared to what Navi Mumbai can offer, or maybe perhaps some of the Thane area. But the kind of return that I was expecting has not happened in the last 2.5 years. It's
all right.
So I just want to check with you guys, what should we do?
All right, Ravi. Why did you take the first one?
I'm assuming given 2010 to 2013 saw a good run up, maybe 30 to 40% appreciation is what I understand the markets may have given him. And then, like he said rightly, in the last year and a half or two, we've seen prices kind of stagnant, and that has gotten a time value of correction for sure. The prices are not running away anywhere in the next 12 to 18 months. If he has a buyer at a good market price today and can book his profit, and he's a pure investor, my recommendation is sell.
Ravi Ahuja's recommendation is sell to our viewer, Amit Goenka. Your go.
Well, I would concur. Again, it's hard to say which which building, because again within the Bhanduk micro market we've seen a number of transactions. We've seen very large corporate developers, including the Tatas, enter Bhandup really for the first time and take on projects, and that is likely to kind of run up the rates a little. So it depends again on the project. So if the project is one of the projects in which a corporate developer came in, because we saw what happened with Gesco, and again today Gesco in Bhandup, really the Mahindra development really still commands a very high premium compared to the rest of the marketplace. So within the micro market, clearly the brand and the development type becomes equally important, whether to stay put or whether to exit. And if it is not yet completed but likely to complete in the short term, then I think the appreciation value really comes in or kicks in a bigger way once the project gets delivered in the next year or two. So if it is already completed, then I would agree with Ravi that it's already completed, it's seen the upside, the potential of now it's seeing any further upside after having delivered and after having seen some life cycle looks hard. But if it's still not completed and likely to complete in the next year or two, then the chances of an upside really kicking in at that time looks far greater.
So hold.
Yeah. So again, I think depending on which part of what your apartment looks like, you could either hold or sell.
Okay, so roughly a hold from Amit Goenka then, and a sell from Ravi Ahuja. Ashish, your take, hold or sell?
I think if the project is completed, he won't see significant appreciation in the next 2 to 3 years. I think he should actively look for exiting this and look for opportunities in micro markets that we've covered today. Clearly, those will have more capital appreciation. And above all, and I hope he doesn't encounter this problem, is about liquidity. Like Amit said, there are new projects that are launched in Bhandup area. So if he's able to exit, that will be great, and then go to a market where the supply and is all fairly matured, where he can sell. People understand the title. It's a fairly active micro market, like Bandra East, as I said. Those are the areas which will see more capital appreciation. Primarily from proximity to things like BKC, airport, infra, Trans-Harbour Sea Link, and so on.
Bhandup to Bandra East is going to be quite the trek for an investor. But thank you so much, Ashish. And hopefully our caller has got all the different perspectives. 2-1 sell is the final one, is the final take from our panel on this big debate on whether home buyers are back. And more importantly, if they are back, where should they be going? So I'm just going to continue on that note. Amit, talk to us. We're talking about assessing whether home buyers are back or not. You talked to us about how NRIs are essentially the ones who are back, and in that sense, there is investors in this market. Be it a home buyer or an investor, what is the trail that they should be following? Where should they be heading? What are the markets that they should be targeting?
Well, I think first, from an investment perspective, liquidity remains the number one requirement for any investor, sometimes even over a book profit.
Okay.
And therefore, Mumbai would still remain, in my view, the number one investment destination, followed by Pune, because these are certainly the most liquid markets compared to any other city in the country. From a value proposition, I still think there's a huge value in Pune and there's a huge value in Chennai. Followed by Bangalore, and I now put Bangalore slightly behind because of the sheer amount of volumes that have taken up the mind space of investors being offered through various channels in the last 6 months to 9 months, because a huge number of cheap investments to schemed investments to discounted inventory, and a number of things have happened in Bangalore, and a number of units have got mushed out. So really, from a value proposition, I think Pune is still largely undersold from its value perspective. I think most micro markets have done exceedingly well and will continue. And I would think, because the good part about Pune that it is growing uniformly in all 4 corners. So there's no, maybe save and except for the very, very high income or HIG segment of downtown Pune. I think you can really look at any of the peripheral regions, whether it's Hinjewadi, whether it's Baner, whether it's any of the other micro markets. I think Pune is a great value proposition. I would still now exert investors, especially from the southern region, to move away potentially from Bangalore and start looking at Chennai. Again, staying within the city limits of Chennai and not necessarily looking at still at OMR or GST or any of the other sort of peripheral regions, but still staying within the city limits. I think that's a great investment proposition to start looking at. I don't think the stories of other parts of the south, whether it's Trivandrum, whether it is other parts of Kerala or Kochi, etc., are still really coming back in a big way, because they still continue to be very, very NRI dominant. They still continue to be investor dominant. So the value of take really is small. So my first pick clearly remains from a high ticket investor is Bombay. For a medium to low ticket investor would be Chennai and Pune.
Mumbai, Pune, Chennai, Bengaluru is Amit's top 4. Ravi, I'm thinking you roughly concur with that top 4.
Well, before I do that, I'd like to categorize the nature of buyer.
Okay.
So the nature of buyer can be an end user or an investor.
Okay.
And again, within the investor, I'm only assuming that investors understand that today, where we are in terms of the markets and real estate, you have to be a long-term investor, which is defined as 3 to 5 years minimum.
Okay.
Coming back to the end user, I think the end user is most comfortable buying in his own home market. So don't go anywhere. You're the right market. You're used to that. You stay there. You've lived there. Please go out there, get the best deals. There are sweeteners available. Price corrections are on. And choose your market and micro market and pick the right reputed developer. Don't go for development risk and buy ready if possible.
Absolutely.
Coming to the investor, I think in terms of the cities, if you have a high ticket budget, it's clearly Mumbai. Other than that, I don't rule out Bengaluru. Given the sheer employment generation, 11 to 12 million square feet of office space demand, e-commerce kind of evolving there. I think Bengaluru towards north, Hennur, Thani Sandra type of locations give great long-term value, while prices have run up, but will remain stable, but long-term you'll be a winner. And then finally Pune, close proximity to Mumbai, great market for industrial as well as IT development and education, and therefore I think will sustain long-term growth.
Just like Mumbai, but not as expensive as Mumbai, Pune. So, okay, we will continue this. But for now, we do have another viewer query coming in. Dunstan from Mumbai coming in with a query about Tata Housing in Boisar. Dunstan, go ahead. Please ask your questions to our panelists.
Yeah, I have purchased a 2 BHK at New Haven, Boisar. I already got the possession at 3,900 rupees. What is the chance of appreciation here, going from here?
Okay, Ashish, if you've heard that, he's got a 2 BHK of 200 square feet in the second floor in Boisar, in Tata Housing in New Haven by Tata Housing in Boisar. What is the kind of appreciation can he expect over here? What is the kind of rent he can expect?
Krishna, I didn't catch the question right.
Dunstan, if you can ask a question to us again, just to be clear.
I have a 2 BHK, 820 square feet of Tata Housing at New Haven, Boisar.
Okay.
What are the chances of appreciation from current rates?
All right, that's very simple. Ashish, 2 BHK, 820 square feet in Tata Housing in New Haven in Boisar. What are the chances of appreciation? What kind of appreciation can our viewer expect from this property?
I think Boisar is a story of, again, future infrastructure coming there, expanding there, and I think it's a story of medium to long term. If the gentleman has made this investment for a long term, I'm pretty confident it will yield the returns. Clearly, I don't have a view on what the prices are or likely to be, but generally speaking, Boisar will see demand as the city expands. Mumbai is actually one of the most fastest urbanizing city, and Mumbai can only go north or sideways. And as we discussed earlier, sideways only goes when Trans-Harbour Ceiling comes. So until then, I think he's fairly well suited. I'm sure he's got a great deal from the developer. So I would recommend that he stays. There are long-term appreciation, very high likelihood chances.
All right, Ashish. In fact, we do have that line graph again right next to Ashish, which says that on average, in the last 1 year, prices in Boisar have been up 17% from 2,920 per square feet to 3,415 per square feet. That's the kind of appreciation that Boisar is seeing on average. Data from Magicbricks.com. Amit, would you agree?
Well, yes, and as rightly your data is projecting that the prices are at 3,600 mark, as the gentleman rightly Dunstan rightly mentioned that the prices there are close to 4,000 for Tata New Haven, which basically means that the average market price is below the Tata price. I do believe that the prices may have peaked at that level for him, simply because Boisar is an affordable segment and there is a huge amount of development in that region. Tata was one of the first to go in. They did create long-term value by actually, bringing in very low value ticket sizes as well as delivering the project, which has obviously caused the upside. Now, whether there will be a significant upside for him going forward in the next year or two looks tough, simply because of the sheer volume or the Me Too's that have started to crop up at much lower price points. And so therefore, chances are the buyers will flock to the newer projects rather than, further pushing the prices in this project up.
All right, so that's the view coming in from our expert panelists. On that note, I'm just going to have to start getting closing comments from all three of you. Ashish, I'm going to start with you. It's a great market for end buyers. Very quickly, your final take, your message to the home buyer out there. Quickly, 30 seconds.
Sorry, I couldn't get your question. Please, can you repeat?
We're just wrapping up this discussion. I want your message to the home buyer. Your piece of advice to the home buyer quickly in 30 seconds.
I think for the reasons that everyone has stated, great time because developers have got things laid down. The sales have been slow, but right now I think permissions are unlocking. Banks are willing to lend, and developers are willing to crack a deal very quickly. Great time to buy. Go for good development. Great locations, and above all, go after people who treat customers with transparency.
All right,
and I think that's the last point is the most fundamental. Are you getting to see the permissions? That's where the issues were in the past.
All right,
if the
pick the right developer is the word coming in from Ashish Shah there.
Safe.
Yes. Okay. So Amit, quickly, we've been talking about so many things. Your final message to the home buyer out there.
Clearly, I would concur with Ashish and the general market sentiment that it is a phenomenal time to buy. In fact, I think it is one of the better opportunities to buy than the last few years have been. And the government really seems very serious about buyers coming to the market, which is the reason, for example, in Maharashtra, for the first time in several years, they deferred the increase of the ready reckoner rates to almost 3 to 4 months, saying buy now or the stamp duty and other things will go up. Bangalore saying, hey, the prices will go up. We're increasing the TDR rate. So great time, next 3 to 4 months.
Great time to buy is the word coming in from all three of our panelists. On that note, we've completely run out of time here on the show. But remember, if you have any feedback or suggestions for us, write to us on the email ID flashing on your screens. We're also on Twitter and Facebook. Feel free to tweet to us and post your query on our Facebook page. Remember to check out our live streaming website, www.mbnow.in. We would absolutely love to hear from you. And with that, it is a wrap on this edition of the Urban Debate. Thank you, Amit Goenka of Nisys. Thank you, Ravi Ahuja of Cushman and Wakefield, and Ashish Shah, British developers. Thank you so much for watching. This is Krishna Kumar signing off.